Yo, what's going on, guys? Welcome back to another video. Today's lesson is going to be on diving deeper into how to get these sniper entries. I'm sure everyone has seen those those crazy wick entries with those small risk to rewards, and everyone's like, how do you get those? Like, even me, when I was first starting, I was seeing these crazy entries and I was just confused because I never waited for any confirmation. I would just enter right away. So now I'm going to be showing you guys how I have my own, rules-based strategy and how to catch these sniper entries and you know, yeah, just catch these sniper entries with minimize risk and maximize reward. So first thing first, before we do get into this, I just want you to remember that use proper risk management for every single trade you use and every single trade you take. Every single analysis you make is gonna, affect you as a trader. If you're gonna come to the charts with a really sloppy mindset, with a really, bad idea of what you want to see happening in the next few days or weeks, then don't obviously trade. Come to the charts in the market with a fresh mindset. That way, it'll be easier and for you mentally and psychologically. So let's get straight into this. So let's start off on our GPUSD, and what are we gonna do first? Well, let's identify what the trend is from a macro perspective. Now, from a macro perspective, we can easily say that the market is overall moving in a bullish um 1 2 3 move, right? We have a 1 higher high, 2 higher low, 3 higher high. We have a 1 2 3 market push. So clearly macro structure and market structure is completely moving up. Now, another way to identify what the macro structure is just pinpoint where the market created the biggest impulses and then the biggest retraces. Now, we're not looking at microstructure, we're looking at macro right now. This is for the macro time frames. So we have an up move, down move, up move. We have a high, or we have a low, to a high, to a higher low, and to a higher high. Sorry. So boom, let's get into this. So now, just looking at what the current market scenario is right now, let's look for our expansion, and then let's look for the retracement, and then look for the re-expansion. So technically speaking, I could say this whole move up to here was my big expansion, right? And then this move back down was the big retracement. We can put that as like purple, and then the second big move back up was the re-expansion as blue. Now, you don't have to always label this. I don't like to do it that much. I'm just using this just to help you guys understand and make it easier. But if this is a little confusing, let's stick to by now you guys should get an overall understanding. So yeah, we know that this is our last expansion move up. Now, what's interesting about this last expansion move up is that it broke the previous high right over here, and it gave us a newer high. And this is called the continuation of structure, as you guys know. Now, structure wise, we are in a bullish moving market. Like I said, we have a low, we have a high, we have a higher low, and then we have a higher high. If the market were to break below this low over here, then we would consider ourselves to be bearish, but until that happens, we're still bullish. So we know that this random move up here is what gave us that continuation of structure and brought price higher for us to trade at. Now, once it did do that, the market randomly started retracing. Now, this isn't random. Whenever the market does break a new high and then it retraces significantly back down, that doesn't necessarily mean that the market is going to reverse now and is bearish. It just means price is going back down to retest an institutional candle inside of that overall expansion. So if there is an institutional candle, for example, right over here, right here, and then another one right here, price is most likely just making its way back down to rebalance price into testing those. Now, not only that, but we also have imbalance from this wick up to this wick right here. IPA. So we have IPA just over here, insufficient price action, giving price another reason for why it needs to come back down, right? And we also have an institutional candle for why price needs to come back down. Now, what's interesting about this institutional candle right over here, this one that I highlighted, these two institutional candles, is that it swept liquidity. It's in the form of where it swept liquidity. Now, I'm not sure if you guys remember, but when I said in the different types of order block video, an institutional candle that swept liquidity is extremely strong. In this case, we can see that we had this little manipulation phase where the market was manipulating, inducing people to buy at the lows, sell at the highs, and people who did sell over here, they did get stopped out once, twice, but the buyers, they had all this liquidity of the lows. We had a buy of support over here, another buy of support, and another buy of support. And as you guys know, in the liquidity concept video, if there's millions of dollars just at the lows over here, most likely price needs to go to break down that support, break that support in order to take out all that money and then reverse, because the market makers overall not scenario, but rather their objective is to bring price higher. Because obviously we are in an uptrend, right? We do see these major retraces, but we are still in an uptrend, and their objective is to bring price higher. The way I know that's their objective is just by looking at the past. The market has been pretty bullish. So if their objective is to bring price higher, that means that they can't let all these retail traders get in with them when they make price go higher. So at this point, people buy, they go in profit, and then boom. The next time, look at this. Price ends up, let me actually go back in time. Let's move this and let's just keep it 1. So you see these rejections, right? You see this rejection at this level of support. You're thinking about targeting the next high. Stop loss is somewhere over here, right? For 2 to 1, 1 to 1, whatever retail traders are doing. Now you see the rejection, price goes your way, you're happy. Now you have to understand, with the retail trader psychology, when the market is going their general direction, their own direction which they predicted, and they're in profit, they're not going to be moving their stop losses to break even. They're not taking partials. They're simply happy, and they're going to do either one of two things. They're either letting that position run, or they're going to be adding on to that position, leaving more liquidity at the lows. And boom, look at that. Price ends up, breaking down, stopping out those people that bought over here, and then price goes up. And the way we can identify that the banks were entering over here was, 1, we have an institutional candle, and 2, we have these really big impulsive momentumous move up towards the upside that hasn't broke much structure yet, but will just over here. Boom. So now we can see that price broke past a previous macro high and created a new high. Not only that, but this institutional candle swept liquidity, which increases the odds of this IC or order block, whatever you want to call it. It increases the probability and chances of this institutional candle playing out. Now, in the refining entries video, you guys should have watched it by now. You guys should know how to refine this, and we're going to do this together right now. So like I said in the institutional candle video, the best time frames to find the cleanest order blocks are going to be the 8-hour and the 12-hour. That's the higher time frames. You can use the other time frames as well, but that's the best. In this case, we couldn't really find any clean ones. So let's make ourselves back down to the 5H, and then let's go down to the 6H, and let's go down to the 4H, not 6H. Okay, so 4H, we have this institutional candle right here. We go down to the 3H. 3H wise, we have to make it a little bigger. 2-hour time frame wise, we have it up to here. We can refine that. And then 1H wise, we could refine it up to here. This last institutional down candle before the move up. Let's go down to the 45 now, right? 45, not much, nothing clean. 30-minute wise, boom. We have this last institutional down candle before the move up. Now, if I were to, make this or refine this even more, because this is pretty refined already. This is just about 20 pips. If I were to refine this even more, I could be risking possibly losing or missing out on this move, because price would come really close to my limit and then either not trigger me in and then move away, or just stop me out because of spread or something like that. So at that point, I feel like this is refined enough. You don't have to refine it anymore. Now, if you are kind of like me, you hate missing out on trade opportunities, then this video is for you, how to catch those snipers. So even though we did refine this, we don't necessarily need to refine this right now, and I'll tell you why. Because we have our higher time frame point of interest, which is this last institutional candle right here. What we want to see is price action come back down into this level, and once price does come into this level, what we're going to be looking for is a schematic of where price shows us it's pretty bearish, and then starts breaking structure of the bearish move up, down, and then comes back to retest that original expansion that broke structure, and then we have our entry. That's the schematic we're looking for. So either way, whether we refine it or not, it doesn't matter, because we're waiting for confirmation nevertheless. Okay, boom. Let me go back right over here. So price taps in, right? Let's go up to the 15-minute time frame now. Price taps in. Now at this point, don't buy right away. Don't be dumb, don't buy right away. That's stupid. Do not buy right away unless you're extremely confident, but even then, just don't buy right away. Wait for confirmation. So price comes in. What we need to see now is bullish structure form. So let's go to the 5-minute and let's see what happens. We need to see bullish structure form. We need to see that proper bullish momentum come in, because we were still bearish on the micro time frames. We were still bearish, but on the macro time frames we're bullish, right? Because think about this. On the micro time frame, such as the 5-minute, this is what price action is looking like. But on the macro time frames, this is what price action is looking like. All it's doing is making a deep retracement to continue making a higher push up. So that's the best way to differentiate from the higher time frame versus the lower time frames. So at this point, in order for us to take a trade, we need to see the micro time frames do something like this, where price starts breaking previous bearish structure, and then we highlight that overall expansion move towards the upside that price led to breaking structure towards the left, and then we look for institutional candles inside of that expansion move back up. So my bad, let me just change that, and boom. So let's wait for price to come back up, and boom, we have more confirmation now. Price ended up breaking this previous structural higher low, sorry, lower high. Let me make this a BOS top, break of structure, and boom. So price ended up doing this. We have a high, we have a low, lower high, lower low, higher high. This tells you that the momentum is there now, right? It's like a pattern. It's really simple. It's basically like a pattern. The momentum is there now, so now we can go up because there's evidence. But how do we catch these entries? Where do I look for my entries wise? Well, like I said, you want to be looking for the institutional candles that are deeper in this expansion right here. So this is the expansion that led to that break of structure, right? Now imagine this. If you were entering right off of, you know, the entry of your zone with no confirmation, entry would be here, stop loss would be 43 pips, take profit, let's say you target here or wherever. You can even target the next high for like 100 to 1. That won't change the fact that your trade is risky because there's no confirmation. When you see this move going down, you don't know if it's going to continue down or it's going to continue up. You're essentially just gambling at that point. So what my rule of thumb is, you want to find that expansion that led to the break of structure. By expansion, I just mean that major move up on the smaller time frames that broke that small little bearish structure that was forming. Sorry about that. So now we have that confirmation that price tapped into our area of interest number 1. We know our area of interest is correct because price action used it and changed structure. So we can see before price came into our point of interest, it was actually extremely pretty bearish. Now, as soon as it tapped into our area of interest, you know, this isn't a random white space in price. This is a real area of interest that we marked up on the higher time frames. So it explains why price used our area of interest to reverse up. So that basically confirms that our area of interest was correct. The institutional candle we chose is correct. So the micro time frame wise looks like this right now, but the macro time frame is going to look like this. Sorry, the macro time frame is going to look like this. As the micro is extremely bearish, the macro is still bullish, but it's in the retracement phase. So right now we could technically consider ourselves to be in the retracement phase, and price action is still bullish, but in order for us to be taking buys, we need to have that micro time frame bullish as well. And in this case, that's exactly what we have. Price created this lower low, lower high phase in the market, and then boom, as soon as price tapped into our point of interest, it automatically ended up not retracing, but rather reversing on the smaller time frames, indicating there's a lot of bullish price action or a lot of bullish momentum. So at this point, like I say, you want to highlight your institutional candles that was responsible for that break of structure. In this case, we have a expansion move right here, and by expansion I don't mean nothing fancy. All I'm saying is that this is an area where price ended up using, right? This move right here is what led to price breaking that previous bearish lower low, lower high structure. So in this case, I would say, okay, this is my expansion, and because this move up is so big and momentumous and strong, I'm assuming that price is going to be retracing back into this expansion move to test any leftover institutional candles. So at this point, what I would do is I would find my ICs, which would be right over here, right over here, right over here, and right over here. And I would set limits, buy limits for both of these. I would set a buy limit right here and a buy limit right over here, with a stop loss at the low here and the stop loss at the low here. Now let's go to the 15-minute time frame and let's just see what price action ends up doing. Let's go back to the 1 hour, because remember, we can't just, once we set our limits, we still have to pay attention at price. And right here, look at this. We can see that price ended up leaving another institutional candle right over here. So there's still a possibility that price can end up using this institutional candle rather than the 5-minute ones over here. So once again, I would set limits at this institutional candle right over here. I would set a limit right over here. So let's investigate this area now. Now on the 1 hour, it's looking even more clean. We have a clean institutional candle right here. And let's go down to the 45. Nothing much. Let's go down to the 30. Same exact thing. 15-minute, same thing. This is an institutional candle. So I would set a limit over here, and over here. So we have 3 limits set. Now someone might say, okay, that's insane, because what if all 3 of them don't end up playing out? At this point, if you see that break of structure, I promise you 9 out of 10 times it will not break all three of your limits. Because if the micro time frame is bearish, sorry, if the micro time frame is bullish and the macro time frames are both bullish, at that point you have that confirmation for why price needs to go back up. There's no more risk involved. There is still risk, and that's where you have to use risk management and use proper stop losses, right? But because you have three positions, this is where you can split your risk. So you can risk 0.5 on this one, 0.5 on this one, and 0.5 on this one. That way you're only risking 1.5. And if you have if you're willing to risk more, risk 1% each position. That's still 3%, which is not bad. It's still manageable. So at this point, I would set limits at this area of interest right here. Entry right over here with a stop loss at the low. My bad. Stop loss just at the low over here. And then that's a 23 pip stop loss, which isn't generally bad. It's pretty decent, right? And then TP would just be the next high right over here. And let's see what price ends up doing. Okay, so we do get tapped in. And then boom, take profit, smack to the pip. So let's just re-look at all of what just happened. So price ended up using this institutional candle right over here, right? This institutional candle right over here was responsible for this is that last institutional down candle before the move up. It followed by a lot of momentum. Price action also left two 5-minute institutional candles down over here, right? Two 5-minute institutional candles down right over here. So someone might say, okay, why? How come? Well, we can delete this at this point, right? Sorry, no, that's the same one. Yeah, so someone say, okay, why didn't I use this one or this one? Well, at the end of the day, even though these two institutional candles looks clean, it is deeper, it still doesn't matter. Institutions, they will use the most random institutional candle they please, and we won't even know. And that's why I always say you need to have multiple points of interest, but not to the point where you have 90 sell side limits over here, 80 buy side limits over here. You got to keep it clean. You see, our mine is extremely clean. We saw an institutional candle right over here on the 1H. I saw it, I set my limit. I saw another 5-minute and another 5-minute. I set limits for all of these. As soon as price tapped into this institutional candle, it came in perfectly. Let's go look at the 3-minute time frame. Okay, I can't look on the 3-minute, sadly. Let's go back in price. Right over here. So yeah, price ended up using that institutional candle, and right away you can just see what price ended up doing. It smacked our TP, and then once again it ended up reversing because there was an IC over here, and then price continued becoming bullish. Now right after that, what did price do again? Let's look at this. Oh, I went way too far, my bad. Right here. Once again, let's delete everything. Let's delete everything we saw, and let's simply just look at where the expansion was. This is my most recent expansion. And why? Because obviously this one broke structure, or it gave me a continuation of structure towards the left. So what am I going to do at this point? Right? At this point, I'm going to focus on the expansion and look for institutional candles there. Let's go to the 8-hour time frame, and we find one. We see an institutional candle right over here. This big ass area. Now let's go down to the 12H if there's anything else. Nope. Go back to the 5H. Remember, you want to use all time frames. There's no specific time frames. 4H. Remember, the thing that I'm doing here is I'm finding out which one looks the cleanest, and I'm sticking to that one. Let's go to the 3H, right? 2H, 1H. Nothing clean so far. Now we do have an area right over here. This last institutional candle before the major move up. Let's go down to the 45-minute one. Go down to the 30, because remember, we're going through every single time frame until we find the cleanest institutional candle. 15-minute time frame, and in reality there isn't much, so we would have to stick to the 8-hour institutional candle, right? Our 8-hour institutional candle is right over here. It is pretty big, but that's the cleanest one, so we'd have to stick with it. And this is where confirmation comes in. So you can maybe refine it up to this institutional candle right here. Maybe you can refine it up to this institutional candle right over here. It all depends on what you prefer. Well, I would simply use this big zone from here to here, and let me tell you why. Specifically because I'm not looking to enter right away, right? I'm simply waiting for confirmation. So no matter how big my zone is, all I'm going to do is I'm going to wait for that confirmation, and then I'm taking the trade. So price comes in. Now what did price do? It generated liquidity before it came into our area of interest. Now, remember what I said, if there's liquidity below your point of interest, it becomes much more higher in probability, and It's just better in general. So now let's go to the 15-minute and let's try to analyze structure. So structure wise, we do see some lower lows, lower highs, and then boom, price comes in. Now we end up breaking above this previous lower high right here, bringing structure towards the top. Now at this point, we would be focusing on this institutional candle specifically because this is responsible for that break of structure. Now a lot of the times, price sometimes might not come back fully to your institutional candle and it will end up reversing. And that's something normal that we all have to deal with. At the end of the day, it will happen. And in this case, I think that's exactly what ended up happening. And okay, no, so right here, perfect. So price action ended up creating a higher time frame institutional candle right over here, this 4-hour candle. At this point, what are we gonna do? We're gonna set a limit. We didn't enter right away over here. Why? Because we didn't have confirmation, but now we saw that microstructure was bearish, but now it's bullish. And what else did it do? It broke structure towards the left, right? We have a break of structure right here. So at this point, I could set my limit right over here at the open of the institutional candle, and then stop loss just at the low for 26 pips, and then take profit could be the next high, and that's a clean 6-to-1, right? 176 pip, 26 pip stop loss, and then price ends up tapping me in perfectly, and then from there TP gets smacked and price continues going bullish. So that's generally how you're catching these sniper entries. It's nothing to do with Wyckoff. Wyckoff definitely helps for more confirmation, but there's nothing to do with all this other, you know, lame shit that you're focused on. It's all about like structure. In all honesty, it's just structure. Because think about this. Imagine you are in a, let's just schematic, whatever, right? Price is overall moving bullish, but you want to take a sell, right? Because you see price is coming to an institutional candle. If you want to take a sell but price is bullish, it doesn't make sense. But if price taps into your institutional candle and then it starts becoming bearish, that makes you more comfortable in taking that sell, correct? So that's why we're waiting for confirmation. We can't take a sell if the structure is buys, and we can't take a sell, and we can't take a buy if the structure is sells. So that's why we wait for that confirmation, and then we wait for price to come back up into that overall area of expansion, and then price continues down. So let's go to GBP JPY. Let's look for this little scalp trade I took yesterday, or sorry, not yesterday, but earlier this week, because price market ended up closing. But yeah, so price action on the smaller time frames, or sorry, on the higher time frames, we can see that the market left a ton of imbalance. Where did it leave imbalance? One, a ton of imbalance over here, right? Let's make this IPA. Even more imbalance over here. More imbalance over here. So we basically have a ton of imbalance that price action needs to come back and mitigate, right? And like I said in the IPA video, if you have all this imbalance, price needs to come back down. There's no doubt about it. Price needs to come back down. Same thing happened here. We had all this imbalance, and what did price end up doing? It came back up to fill that imbalance, and then it continued going up. So this is just more of a confirmation for why price needs to go down or up. In this case, we saw on the smaller time frames, price broke structure right here. So there was like this small little higher low trend, and then the market ended up breaking structure. Now once we did get that break of structure, I simply looked at that expansion move down that was responsible for it. Now from here we have that institutional candle, the last major move up before the move down that broke a ton of structure inside of this move up here. Now like I said, we have imbalance and we also have liquidity. Liquidity rests all over here of the sellers and the buyers, sorry, not the sellers, but all the buyers. So there's all this buy side liquidity and sell side liquidity because of sell stops that rest over here. So we know that price is most likely going to make a run below this liquidity and then fill in all this imbalance over here rather than just this one and reverse, because liquidity is like a magnet. So in my head I'm thinking, okay, bet we did break structure on the micro time frames. The micro time frame is slowly moving bearish as well. I might as well start looking for sells just to take a sell back down here. So my overall TP was just this area here. Now my area of focus, simply I focus on that last institutional down candle, up candle before the major move down that broke a ton of structure. There's some type of, you know, higher low over here that the market ended up breaking, BOS down, something like that, right? And then price ended up, you know, breaking that structure and then continued down. At that point, I'm thinking, okay, as soon as price comes into this area, I'll look for my schematic. So let's go down to the 1 hour time frame. Let's see if I can refine this. I refined it up to here, perfect. Refined it up to this institutional candle. Now one thing that I'm also noticing is price is creating a ton of liquidity now just over here. We have equal highs at the top. We have money resting at the top that the market will need to take out eventually now. And like I said, if the liquidity is above or below your institutional candle, it increases probability by a lot. So let's play this out and see what the market does. So it taps into our area of interest perfectly. We're going on to the 15-minute. Now 15-minute wise, we need to see a break of structure of here. So we have a high, higher low, higher high, higher low, higher high. So we broke structure right here perfectly, right? Let's go down to BOS, down, and boom. Price already broke structure over here because we had this high, high, higher low trend. Now it would be nicer if we get a break of structure of over here as well, but we sadly did not get that quite yet. But that doesn't mean that price will not do that later on. Let's look at the 5-minute time frame now. 5-minute time frame wise, this is that expansion down that broke structure right over here. So generally my ideal area of focus would want to be this institutional candle right here, from here to here, because this is that last institutional up candle before the move down that broke structure, right? That broke structure. Now I wouldn't be focusing on this institutional candle because this isn't the one that was responsible for that break of structure. This one right over here is. So at this point I would set my limit. I would take a sell limit right over here for the short. Put my stop loss just over here. So if I'm being conservative, I would put my stop loss over here at the high of the zone. If I'm being extremely more sniper wise, I will put my stop loss right there because I want to catch the best risk to reward. And then TP could either be, if you're scalping, TP could either be just the next low over here for 35 pips, which is a 4-to-1, or if you're crazy like me, you can target the next crazy liquidity low, which is right over here for 200 pips. And let's see what the market ends up doing. Went on to the 15-minute, play this out a little bit quicker. And look at that. Price taps into the pip, taps into our sell limit to the pip perfectly. And then what does it do? Let's see. Okay, so in this case, you did get stopped out if your stop loss was there. But that's part of the game, I guess. If you did adjust it and put it at the wick high, like I said before, you wouldn't have gotten stopped out. But like I said, it's just a part of the game, and shit like this will happen a lot. But now you can see that price is moving bearish, and what is it doing? Well, it broke a ton of structure now. It broke a ton of structure, and price is overall moving down, and you would have caught this crazy wick sniper entry. Now, if you do like to take your institutional candles, let's go back to the 5-minute, by the entirety of the 50%, so you measure the open to the low. Let's take our range fib, and your entry could have been over here if that's what you prefer. Entry right over here, and you could have caught this even more sniper entry right here with a 4.5 pip stop loss, right? That's something you could do. I don't do that because a lot of the times I do get stopped out, or price just doesn't trigger me and it misses me by a few pips. So I stopped doing that. But overall, you can see how bearish price really is now, and how we caught that crazy sniper entry. And if you did take, set your TP over here, that still would have been a nice 14-to-1. TP would have got smacked. I did end up closing just over here, and I took 50%. So it was a decent like 5-to-1, I'm assuming, because I did take partials, move my stop to break even, and end up closing right here. But anyways, that's generally how you can catch entries on the macro time frames and the micro time frames. Now, if you don't like looking for confirmation, this is for the people that don't like confirmation. I have something for you as well. So let's go to USD JPY. Let's go to NZD USD actually, because this is a potential trade I'm focusing on later on in the year. So if you don't like looking for confirmation and entries and you're not that type of person, I have something for you as well. Don't worry. So generally we can analyze from the higher time frames. You don't even have to go down to the 1 hour. All we can do is stay on the higher time frames. Right here, we had this area of liquidity. Price ended up taking it out, and it took it out in the form of an institutional candle, which that means this area of interest is increased by a lot, meaning there's more probability now because this is that last institutional up candle, and it took out all that liquidity of the sellers, and then from there the market ended up selling off, and it gave you that break of structure. So same concept, we're doing the same exact concept, but instead of waiting for price to come into our area of interest right here, and then we look for that confirmation, what you could do is highlight your institutional candle, right? And the second price comes into here, you can do two things. Either take the sell right away at the open of the institutional candle, or measure the 50% of your institutional candle because you are on the higher time frames, and set a limit at the 50%. And your stop loss will have to be pretty big. I'm not gonna lie, your stop loss would be pretty big for about 60 pips. Now this is for the swing traders. Remember, Any profitable swing trader always does this. They don't look for the confirmation. They're always entering right away off of a higher time frame institutional candles, because they know that even if price does not want to sell off all the way back down, it will still give you a decent like 50, 60, 100 pip move down. Now, I don't recommend this at all, but I did this before and it did end up working out a lot for me. So if people do want to do this, I don't recommend it, but I'm saying it does work, and you guys should backtest it on the demo for sure before you do it on the live. So set your area of interest, either enter at the open or enter at the 50%, and then put your stop loss above. Now your stop loss is going to be pretty big and huge, but if you don't like to look for confirmation, you're more of like a chill swing trader type of guy, you don't really care about making $1,000 today, you really care about making consistent income later on in the future, then this could potentially be for you. But I still recommend everyone to look for that proper confirmation. And let me actually show you guys a clean example of where this did end up playing out. Look at Euro CHF, right? Let's go to the weekly time frame and let's delete all of this. Now, weekly time frame wise, we did have this institutional candle right over here, right? Like I said, if you did want to enter, you would have either entered on the open and you would have been in like, what's that, 50 pips in drawdown, and then price would go down. Or you could take your fib, measure the high to the low of the institutional candle you're entering on, and enter on the 50%. Now, stop loss will be big. I'm not going to lie to you. Your stop loss will be big, and your risk to reward will not be the best. Now, in this case, Euro CHF is not a volatile pair, so 32 pips not bad. But if you're entering on the open, it's pretty bad, right? 66 pips, that's not good at all. So you can see price ended up reacting off of the 50%. It did go like a couple more pips in drawdown for about 13 pips, but then overall it gave you that nice 200 pip move that you're looking for. And this works on GBP USD as well. I've seen this work a lot. Right over here we have our institutional candle for the sell, and you have to use your higher time frame candles. You cannot be using 1 hour candles, 2 hour candles. You have to be looking at the weekly, the 4 hour, and the daily. These are the only times this works. Price comes in, and remember, you're putting your stop loss at the high of the institutional candle. So this would have been a really big 200 pip zone. Now I'm telling you, don't do this. Do not do this. But if you do like to wait for confirmation, or you don't like to wait for confirmation, then at the end of the day, fuck it. Who cares? It still works at the end of the day. So you would have been in like deep drawdown. Even if you did enter off the 50%, you would have been like 60 pip drawdown. And then the market ended up selling off for about like 400 pips, giving you that intraday move that you expected, that swing move that you were expecting, and then price continued going up. And it happens multiple times. But remember, this isn't going to happen in the middle of the market right here or the bottom of the market. It happens at the highs and the lows. It has to be happening at the significant highs and the significant lows. For example, this is a significant high where price ended up breaking down a lot, and it broke structure over here, right? So that generally gives us an idea on why price reacted off here for 400 pips, and then it continued becoming bullish. Now, this works on other pairs as well, like USD CAD. Let me try to find an example. I doubt I can, but let's see. Okay, right here, perfect. So in this case, your stop loss would have been just shy. You would have not gotten stopped out, right? Like, look at that, 21 pips, and you did not get stopped out. So price comes in, and you enter either on the 50 or the open, and then price ends up selling off all the way back down. So this does work, but it's really risky. But for the people that have a lot of money, they don't have the time to be looking at the charts like that, I recommend this a lot, specifically because you're a long-term investor. You're not caring about the small little loss over here, small little loss. You're here to catch that big move down. So you could definitely do that. And on the 1 hour and 4 hour, this works as well, but I don't do this anymore. Like I said, I did it before, but it did not make sense. You don't have that confirmation, so don't do this. Stick to the higher time frames. Look for confirmation. And yeah, that's basically the video on how to catch sniper entries. I hope this video was helpful, and yeah, I'll see you guys in the next one. Take care.